Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Wednesday, June 8th. The big mover overnight was the yen, which gained after Japan's first quarter GDP was revised up in line with expectations. Now, to tell the truth, I'd have thought that an upward revision in GDP would send stocks up and therefore weaken the yen, which is the usual relationship. But this time, both stocks and the yen strengthened. Sterling is also strong, as is the New Zealand dollar, the Kiwi, ahead of tonight's Reserve Bank of New Zealand meeting. More about that in this afternoon's video. Now, the European day starts out with the industrial production data from the UK. German industrial production released yesterday was slightly better than expected, but recently German production's been doing better than UK production, so that doesn't necessarily mean a better than expected outturn for the UK, especially as the Brexit referendum approaches. Now, assuming that the figure comes out near the weak expectations, I think the weak data could prove negative for sterling, as it supports the idea that the UK economy is softening beyond what Brexit fears might suggest. That's all that's coming out during the European day, so I'll discuss the North American indicators as well. In Canada, housing starts are expected to slow, but building permits are expected to rise. In any case, the pace of increase in housing seems far away from the Bank of Canada's 9% per year forecast. In that respect, I'd expect the figures to be negative for the Canadian dollar, depending, of course, on how the next indicator comes out, which is the U.S. Department of Energy's weekly oil inventory figures. They've shown a drawdown for the last 2 weeks. The current week's figures are for after Memorial Day, which is May 30th. Memorial Day is the traditional start of the summer holidays in the U.S. Inventories may begin to decline in earnest from now as the driving season starts. The American Petroleum Institute reports, which isn't public, reportedly said that inventories fell 3.6 million barrels per week last week, slightly more than the 3.2 million barrel decline the market expects from today's Department of Energy figure. So anything around that level should keep the oil price stable around current levels, which would be helpful for the Canadian dollar. Any disappointment here, though, market participants may get tired of waiting. For an update on the indicators coming out overnight, including the RBNZ meeting, please watch my North American opening market comment later today. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.